Hey traders, Raghee here. Let's get a quick audio and video check-in for our Monday episode of Charts and Coffee. Good to see everybody. Hope everyone's doing well. Excellent. All right. So let's get to it. All right, very cool. All right, gang. So, well, let's go ahead and kick off our session. Let's take a quick look, by the way, if you haven't done so already, just to sort of kick off the week. Make sure you check out the calendar. Sunday's a great time to do it. If you've got exposure to the US dollar and some of the currency swing trades that I've been walking folks through in the futures room, one of the things that we've been doing is shorting dollars. And one of the places I've been interested in it is the euro, but that one's got a lot more volatile. Dollar relationship to euro is pretty tight. It's a very tight inverse or negative correlation. So keep that one in mind whenever you see those ECB events. That's going to affect those dollar positions. So just kind of scroll through the entire week. All right, I've got interest in Australian dollar and exposure. And then Wednesday. Well, as a general rule, gang, I don't like to be short immediately going into any Fed event, press conferences, Powell speaking, etc. And so Tuesday, not so much today, but Tuesday will be we keep that in mind. And by the way, I've discussed this tendency. It's not a setup, but it is a tendency. I've discussed this tendency in the Countdown Trader newsletter. In fact, what that window is and how you want to position yourself, or at least think about positioning yourself before that. So if you head on over to countdowntrader.com, you'll get tidbits and tactics like that in that free newsletter. And it is a free newsletter. So this event actually really dovetails nicely with the update. I believe it was just last week that ties into what we have going on. GT on Thursday, and then the round the week off. Kind of a quiet Friday. All right. So please do check out the calendar in its entirety. The other calendar you want to know, and we have a very active earnings calendar this week. I don't want to recommend playing earnings right in front of the event. That is not how I do it. But we always have, so my window is much further out, much further before the earnings release. However, remember, we are going to have volatility that's going to trigger because of those earnings releases, especially if they're heavily weighted stocks, or even if they're not heavily weighted stocks, right? In front of the event, there's a high likelihood, as I like to call it, the tail can wag the dog. The smaller stock, by way of weighting, can move an ETF, can move an index. All right, so we are still very bullish this market. That has not changed in, let's see, this is January, December, November. We've been bullish since just before November, but we had very clear technical directional bias since November 3. So we have not deviated from that at all. All right, so let's go ahead and take a look at some symbols. First one up, I am in the interest of everyone getting a shot, I'll go through the first symbol there, Bank of America. All right, BAC. Now remember, this is a post earnings. Now I like the you have Bank of America and you have Wells Fargo there as well, and those are pretty much the same narrative to me, which is we're past earnings, we're in an overall uptrend in the XLF. So I like those names very much for buy the dip opportunities, no doubt about it. I think those are going to be terrific opportunities for patient traders who don't want to chase brand new highs, know that earnings were on their way and that we could see post-earnings volatility create that pullback. So I like that very much. That's a really good sector. And actually, there's a number of healthcare stocks and financials that have been on my watch list. I believe we talked about them last week, but they've been on my watch list for my sector secrets. And that's something we want to get to work on this week. So good stuff. All right. Next up, hey there, Tony. Microsoft, sure. So Microsoft is an interesting picture when you look at the structure of MSFT, the Qs, XLK, and Apple. Now, why do I mention all four of those when I talk Microsoft? Microsoft's moving higher. It seems to be perhaps moving with the tide finally, but I have not been paying a lot of attention to Microsoft. The reason being is I'm better off playing XLK, Apple, or QQQ, where the structure is far better. And structure is number one for me. Structure is the number one place that we begin our watch list building, and look, some symbols are going to get preferential treatment, preferential attention. And I can't say Microsoft is. However, I sure wouldn't necessarily short it, but it seems like it's finally moving along. Yeah, to your point, it's breaking out. Absolutely. Absolutely. And, as far as tech, and as far as, remember, the sectors that are tethered to tech, okay? The sectors that are also tethered to tech, meaning a lot of folks are talking about some potential tops, right? One thing we've been talking about in this entire month is the tendency for January to have some pullbacks. We did have some mild pullbacks. And really the bigger question was that all we were going to get? Was that all we were going to see? And could we withstand that? Just last week, when I was doing the Sector Secrets Mastery Q&A, one of the things that I walk the traders through is there are certain positions that have been doing quite well. There are other positions that we took some heat on and had to take our drawdowns on, had to take our losses. As I say, we had to take our medicine. The thing to remember here, and let me pull that account up. Taking medicine, slowing down the pace of trades is something that we all have to do. November was clearly, affected by Thanksgiving Day holiday. Then we've got December affected by Christmas, structures in the market. And then January, like I said, I like to drop the hammer back in January. I like to look at the potential opportunities in January. This is the Sector Secrets Mastery. And this is something I'm going to review in the live trading today. You guys are getting a little bit of a sneak peek, but this is what we've been doing in the mastery. This is what the $2,400 budget per trade P&L is. It's anywhere as low as $1,100 to the upwards of about $3,000. And so the budget per trade is going to ensure certain limitations on losses, but of course limitations on position size. Anyway, this is what we've done in that mastery so far since November. Now, I think what's really important, let me go back to the charts here. I think what's really important is to remind ourselves that a lot is possible when the markets start to accelerate. A lot of that's possible when we're past a lot of the holidays, we're past a lot of the lower volume events. And we never, ever look to short. Every one of those positions was either potentially a call vertical or straight up directional long call debit. And so I think a lot of traders get very uncomfortable about naked options. Gang, naked long positions, long puts and long calls are perfectly fine. Your limit of risk is what you paid for the options. Naked selling option is tantamount to hating your money. So when people say, oh my gosh, naked options, ask them, you talking about naked short or naked long? Yeah, a lot of talk of nakedness too early in the morning, right? Who's got some good coffee going on here this morning? I'm releasing the Kraken this morning. I've got, this is some good old fashioned Death Wish this morning. Some Death Wish coffee. So keep that in mind. There's nothing wrong with a naked long call, naked long put. Your limit is whatever you paid for the option. And that's if you're willing to risk the entire debit, which we do not in the Sector Secrets. So I get a lot of questions about naked options. You don't want to sell options without a safety net, right? But being long is a big part of what I do in that room. And it allows for traders with smaller accounts actually to engage the market without even a margin account, right? Those aren't even in margin accounts, right? When you start doing verticals and say put credit spreads, which are fine too. But if you don't have a directional read on a market, you can't magically put some multi-leg option strategy together and somehow think you're going to navigate around that lack of clarity in the direction. All right, thoughts on XLF? I like it. Mal, it kind of goes back up to the earlier question from MC, who was asking about Bank of America and Wells and so forth. Yeah, I'm a big fan of what's happening in terms of the potential pullback on the XLF, and I might even get more granular, not only playing the top, which is what XLF would be, but looking at the individual double green boats, right? Double green being the ability for us to trend compounding. Again, find the index, find the sector, find the stocks that are all looking like the path of least resistance is up. All right. So again, not surprised by the strength in any way at all, because that's been the path of least resistance, right? So, all right, moving on. Next question is about Apple. So, this is one thing as far as the trading plan, Becky, number one, nice trade, right? You're long Apple calls. I don't know from where. So generally speaking, I would assume if you bought the way we talk about in this room at the dips, when the market is double green, you're right as rain. What I would tell you is what we've approached right now, and this is one of the targets that I teach not only in the ETF Masterclass, but also in Sector Secrets, which is what are those previous swing highs? A lot of traders will start to pull Fibonacci retracements from here, which is fine for a second target, but not for the first. For the first, I'm a big fan of what are the recent highs, swing highs. This is a Darvis resistance level. So I like to proactively scale out. And then with the second profit target, having paid myself and made certain moves to ensure that I don't let a winner turn into a loser. Yeah, I think at that point, I have a lot more latitude to control risk, but a lot more latitude to see how much higher is higher after the first target. A lot of traders underestimate the importance of that first target. And without a prudently placed first target, you're going to find yourself in a situation that a lot of traders find themselves in, which is you're going to find yourself in a situation where you've got sometimes a really healthy, unrealized gain that you have yet to take profit on, which means you're still in potentially a risk-based scenario, stop loss, not at a break even. And, though I think the first target is so underestimated in terms of its importance of risk management. Okay. Hey there, Chai. MGM. Yeah, I like MGM. Double green. It went a little yellow, but one of the things we talk about here in the room is that the market goes a little yellow. Does that get us bearish? No. Does that scare us out of a long? No. We just want to remember what was the trend that preceded the transition to more of a sideways market. And that comes down to a Ragheeism that I call respect the trend that was, which is absolutely a spin on something Charles Dow taught 140 years ago. So, which is stick with the trend until it's broken. But I thought that really isn't that helpful, Charles. I mean, you're brilliant and everything, but respect the trend that was in transition means that even if the market doesn't have a trend that's intact, double green, it can have directional bias. We can still be bullish in a market that's not exactly a double green trend. So the only thing I would just heads up is the Feb 10 earnings. We are getting closer to that window, right? It's an ever truncating window until the earnings volatility. Generally speaking, if I've got a double green market going into earnings, I like the potential run and to earnings. So this goes back to Becky's question too. I don't hold through earnings, very seldom. Now, Becky, you might have an opportunity, and so might you as well, Chai, because if certain criteria by way of profit targets and expected moves are met, then I am open to taking a smaller position through the volatility of earnings, but that's only if those criteria are met. All right, Medtronic. Thanks for the question. N, double green. So let me do this down here. Take a look at, I'm going to change the lower symbol to the financials. Okay. So I've got Medtronic and I've got XLF. Sorry, I'm going to do XLV. What am I thinking? Clearly the coffee hasn't kicked in yet. All right. There's XLV. No, still didn't. Let's do that one more time. Third time's a charm. That's what I hear. There we go. Okay. XLV, healthcare ETF, heading higher. Medtronic, double green, heading higher. Absolutely one of the XLV names on my down here. I've got my notepad. I haven't quite migrated it to my desk yet, but yeah, I like it. Again, got to know proximity to earnings on every double green pullback you take. Whenever a market's moving lower, I also want to be aware of why. Was there something from a company situation that there was news? Was it an analyst downgrade, which I think are the gifts I keep on giving? I love when a double green stock moves lower to a pullback level because some chucklehead downgraded it. Look, I was just watching the Big Short on Saturday, and that's a good one to watch from time to time to remind yourself who we're dealing with in terms of analysts and shenanigans on Wall Street. Not that everyone on Wall Street is that way, but we don't get into the troubles like we did in '08 because only 4 people are that way. So I think that was a good reminder. And I love analyst downgrades into pullback buys. Hey there, Stephen. TDOC and F. So yeah, TDOC has been one that a lot of folks, this has been, this is parabolic. So parabolic requires a completely different, it's not as I was calling it last week and sort of in my mind, considered a vanilla trend, a plain Jane pedestrian trend, right? Moving within typical historical price movement ranges. This one clearly has gone parabolic. The trick is to find when the market has started to accelerate beyond its historical price movement range. And at that moment, which you can tell within a day or two, oh, okay, at this moment, this particular candle and these couple of days have now shown that the market's accelerated away from the wave in such a way that it's now parabolic. That's when you can play 2 kinds of strategies. One, you can look at shallower pullbacks, ADMAs, VWAPs, and you can look at high volume confirmation breakouts. Neither one of those are my preference, but that's what you've got to do. And I think a lot of traders like to trade like that all the time. We just want to remember that when a market does accelerate beyond its historical price movement range, we have to use a different tactic. The tactic doesn't come first. The identification of that environment absolutely does, right? So, I'm gonna have to wait for those more aggressive type opportunities to come up now that we are in that hyper accelerated environment. I love soybeans. Thanks for the question, Jacques. I love soybeans, corn too. While we're on the topic, and pullbacks are going to be something I will look to take advantage of. Now, for those of you thinking, Rag, I don't trade soybeans, I don't trade futures. You should at least be open to what they're communicating about the markets. They are the grocery store to the world. They are there's a lot of importance we can place, especially in a reflation environment with commodities. But if you don't have a commodity trading account, you can also look at the Tecrium SOYB symbol, which is your soybean fund. So there are a number of ETFs that allow us non-futures traders, right? I love trading futures. I love trading Forex. But there's a lot of folks that don't have those accounts or don't feel comfortable with those asset classes. And that's fine. You can also look at some of these ETF alternatives, which is pretty exciting. And I do like soybeans and corn, CORN. That's your ETF alternative to ZC. Pulling back pretty hard at the moment. Do I like Nike? I'm in Nike, Alex. Yeah, I'm in Nike, and I'm going to continue to focus on that. Like it a lot. Let's see. Starbucks. I like Starbucks a lot. I'm going to continue to focus on that one too. Yeah, Jason. Yep, like Starbucks a lot. Lyft. Yeah, I like Lyft better than Uber. Lyft on my watch list last week. I missed my window. We might get that opportunity again. Challenge is just as we get closer and closer to earnings, Feb 16. But yeah, Lyft is definitely on the radar, 100%. Just bear with me here. Okay. Yeah, Lyft is on the radar, and Starbucks has been as well. Yeah. Oh gosh, GME. Yeah, it's crazy. Yeah, it is crazy. There's nothing. Yeah, Cindy, I've got no thoughts on it whatsoever. Once it goes ballistic like that, it's not that different from the conversation we had about just now about TDOC, right? Same idea. UNH goes back to that XLV conversation, but UNH is not my favorite in terms of the symbols that I could play with an XLV. So this is very much, one of the things focus on a lot in Sector Secrets is watch list. I mean, people like strategies, and I get it. We want indicators that are great. I get that too. Especially the indicator side of things. I've created most of the ones that I use because there's certain answers about the market I didn't find in the indicators that were out there already. So indicators are important. The strategies that we use to confirm our trade entries, very important. But before all that comes probably the most neglected part of trading, which is a process for watch list building that finds us high probability entries to sync up with our strategy, our chosen strategy, and sync up with the indicators that we use. And if there's anywhere that traders tend to sort of neglect the, arguably 3 or 4 steps part of the trading process, it's the watch list part. They tend to just sort of trade whatever else is trading or whatever was working a month ago or a day ago and not re-examining, is UNH, and I'm glad you brought it up, and thank you. It's a huge player in XLV. It's a huge player in DIA. But is it the best way to express an idea about bullishness in healthcare at a stock level, or even do I want to go further out to the tide at a sector level? So that's and the same thing's going to be with American Express. And I'm running over, so I'm gonna wrap it up here. But yeah, Steve, I'm looking forward to it too. I mean, we're going to get into a lot of detail around this. What have we done so far? What were the losers? We're going to get into a lot of granular detail about these trades, and we'll do that. Probably we're going to be together for 2.5 hours. We'll do that probably the last hour of our session. Really get into how do we track these trades? How do you monitor the trades? How do you monitor the individual setups? What's our P&L, and what are the risk thresholds been like? So I'm looking forward to that a lot. Yes, absolutely. All right, gang. Again, happy Monday. Thanks for joining me for Charts and Coffee. We'll be back here tomorrow morning at 9 a.m. And let's see. If you guys want to join, by the way, you can still join me today if you're ready to start trading options and ETFs. So a lot of the tools and methodologies I explain in Charts and Coffee, I believe it's at simplertrading.com/ETF. I think it's ETF. Probably should check. I know I have a list. My right hand here in the office gave me this really convenient list that I need to have open, but I think it's ETF. Yeah. Or sector. There we go. But it does forward. There you go. So I look forward to seeing you guys later on today. And it should be a great conversation. And we're going to rebuild the watch list as well, the first hour or so. Okay, gang. Have a great one. Keep in mind the Federal Reserve. Check out the Countdown Trader newsletter for how I position myself according to the calendar, in many ways, in front of these Fed events. Have a great one. I'll see you tomorrow. Be good to each other.